Well, I suppose the top one has got to be around market structure, looking at how we should be interacting and executing in the market, whether that be on dark pools, for example, and saying, is a broker crossing network still available? No. But then, does an OTF include into equities? And how should we be engaging in these dark pools, MTFs, OTFs, systematic internalizers? Also, we've got to be looking to bringing more clarity into the market structure. So everyone talks about a consolidated tape, understanding that that's going to give a lot more clarity around dark pools as well, and then enabling greater information slippage quicker on what's actually happening, which may actually reduce execution size. Another key area, I think, is market stability. Everyone likes to talk about the flash crash. But there's been other areas where that's been called into question again, and so we need to make sure that we put systematic controls in place to actually make sure that we look at market stability and make sure we don't have instability in the marketplace. And the final one, which is a bit topical, is around reduction of fraudulent activity. So where we've had arrests on insider trading recently, and making sure that we have controls in place to remove that and make sure we have a clean image into the financial marketplace. Yeah, sure. I mean, when we're looking at the guidelines, I think one of the famous ones is the ESMA Automated Trading Guidelines around high-frequency trading and direct market access, making sure that we have clarity in terms of checks that need to be put in place, and also post-trade checks in making sure that we keep market stability and structure in place, and we look for certain prohibitive or predatory activity that can occur in the market. A more recent one that's happened over the last couple of weeks is actually the ESMA guidelines around short selling and the waiver, and defining what actually market making activity is, which is actually going to have quite a large impact onto the market, because we're going to have to go back into defining what is a market maker. People who are engaging in market making activities are now going to be registered. They're going to be engaging on each individual security or product they're going to be trading, and they're going to have certain criteria around what they need to put in place for market making activity. We're still getting in place we're getting sort of a lot of inbound queries around the ESMA Automated Trading Guidelines, even though they've been active about over a year ago now. And we've got a large amount of clients with now from regulatory pressure, from the example where we've got Swift Trade, which have been fined £8 million for layering. People are actually getting engaged around this a lot more, and actually asking questions: how can we implement this? How can we get this done? We're also, one of our focuses as well is actually more forward thinking, is around MiFID II, when we're looking at fraudulent activity, and particularly sort of insider dealing, looking at how can we put together the whole impact of the trade. So this comes from looking at voice recordings on the trading floor, running that over voice biometrics, and seeing that there's potentially interesting activity or interesting conversations happening at that point. And then also overlying that with the trading data and the information from the market, and to see if there's any suspicious activity around that.